session we are going to learn what is a cash budget. Okay, so cash budget represent the cash requirements of the business during the budget period. Okay, so there is something known as budgeting or planning which we need to make. Okay, so what are the cash requirements during that planning or budget period? Cash budget will represent that. Okay, so it is a plan of receipts and payments of cash during that budget period. Okay, so plan of receipts and payments during that budget period. Okay, then the cash budget can be for a short term or a long term. Okay, so there can be a short term cash budget or there can be a long term cash budget. Now talking about the short period cash budgets. Okay, usually short period cash budgets are prepared in monthly basis. Okay, that is for every month the budget is prepared, a separate budget. Then as regards to receipts for short term budgets, what are the receipts that we will have on monthly basis? So let's see, first major is receipts from debtors, that is our credit sales. Then receipts from your cash sales. Then any other receipts. Now any other receipts will include what? It will include your some receipt of dividend or some interest. So all these receipts are not your regular receipts, they are periodical receipts, but it needs to be considered. Third, regards to payments. Okay, let's see what are the payments. Okay, so first will be main important will be payment to creditors for purchases. Then there will be some payments for expenses. Okay, now these expenses will include all your wages, overheads, admin, sales, salaries, etc. Okay, then what else? There will be some payment which are to be made periodically. Okay, even that needs to be considered. So what are the periodical payments that you need to make? You need to make payment of income tax. Okay, then other tax like sales tax, service tax and other taxes. Then some interest, then debentures. Okay, then there may be also some special payments which are need to made, like redemption of debentures. Okay, payment of loan. Then dividends to shareholders. Okay, so these are not regular payments, they are to be made once in a while, that is periodically. Okay, or there are special payments which are to be made like redemption of debentures, repayment of some short term loan. Okay, so while preparing your short term or short period cash budget, you need to consider this regular payments and receipt as well as your periodical payments and receipts on month to month basis. Okay, since you are preparing it on the monthly basis, there will be monthly inflow and outflow of cash. Now we will see what is a cash budget for long period. Okay, so long range cash forecast often resemble your projected sources and application of fund. Okay, so that is, you need to find out what are the various sources and application of funds. Okay, during that long range cash budget. So long range cash budget is prepared for a particular year. Okay, so it's not a monthly budget. Okay, and it doesn't have a detailed information. It will have a summarized information of what are the various sources and application, and what will be the summary of what are the inflows and outflows for that particular year. Okay, so how to prepare a long period cash budget is, first we need to take cash at bank. Okay, in the beginning of the year. Then second is, we need to add what is a trading profit. Okay, expected trading profit before tax. Okay, expected trading profit. Then we need to add your depreciation and other development expenses that are written off. Okay, so that expenses that are not incurred in cash in this year, they were incurred in the earlier years, but they were written off in this year. Then some sales proceeds of asset. Then proceeds from fresh issue of shares or debentures. Okay, or even proceeds from your loan taken during the year. Correct? Then reduction in your working capital. Okay, that is current assets except cash. Okay, minus your current liabilities. Okay, if that is negative, then the reduction in that needs to be added here. Then what all things you need to deduct? Dividends. Correct, has to be paid. Then if any asset has been purchased, your cost of asset, you need to reduce it, or which has to be purchased during, not during the year, which needs to be purchased in the next year. Okay, then taxes that has to be paid. Then debentures or shares redeemed, or repayment of loan. Okay, then your increase in working capital. Okay, when there is a reduction in working capital, you need to add it. Okay, when there is an increase in working capital, you need to deduct it. That why you need to deduct is this: increase in working capital means more cash is required. Okay, so you need to deduct that, or your cash balance will be less. Okay, so more cash outflow will be there. And when there is a reduction in working capital, there will be saving. Okay, so there is, it's like a more inflow, so you need to add that. Okay, so this was about a long term or long range cash budget. We'll see it later along with the example. Now what we'll see is, we'll see the format of the cash budget for a short term. Now this is a format of cash budget. Okay, if you see, the cash budget in the books of dash dash company limited. Okay, then cash budget for means you have to write the period for which year it is. Okay, then it's a short term cash budget or short range cash budget, so it's prepared on monthly basis. So particulars, then for each and every month there is a separate column. Okay, then opening balance. Now this opening balance will be for month 1 will be the closing balance of last year, actual closing balance of last year. You need to take that here. Okay, in opening balance A. Then receipts. Now what are the various receipts? This is the closing balance of last year as per your balance sheet. Then receipts, you have collection from debtors, then you have cash sales, then if loan is taken from any bank in a particular month, or you're planning to take a loan from a bank in a particular month, the same needs to be included in that particular month. Then share capital issued. Okay, so when the share capital is issued, you get some receipt from that share capital issued. So in which month the share capital is planned to be issued, in that month you need to include this receipt. Then miscellaneous items, there may be some miscellaneous items like dividend to be received or interest to be received. All those items needs to be included here. Then other items may include your sale of fixed asset, receipt from sale of fixed asset, or your investments also. So all you need to plan in which month you're planning to sell the fixed assets or investment. In that particular month you need to include it. Okay, then total of B is total of all the receipts. Okay, so it will come here. Then payments. So payments are, first you take a regular payments, that is payments to your creditors, okay, for purchase of goods. Then your normal wages, the overheads, okay, then interest which has to be paid, okay, that dividend to be paid. This is a periodical payment, so you need to find out in which month you are planning to pay a dividend. In that particular month it needs to be included. Then corporate taxes, other taxes also, these are not monthly payment, they will be paid either once in a quarter or once per month depending on the nature of tax. So accordingly it needs to be included in that particular month. Then capital expenditure may be your purchase of fixed assets, okay, or major renovation and all these things. So you need to plan in which month the capital expenditure would be incurred and how much capital expenditure would be incurred in that particular month, and accordingly that needs to be included in that particular month. Then if there are some other items other than this, that will come here. Then total C is your total of payments, okay. Then the closing balance will be your opening balance, that is A, plus your receipts minus C. Okay, so this will be close. Now this closing balance will come here as the opening balance. Okay, so your cash flow will be connecting. Again here the closing balance in the month 2 will become opening balance in the month 3 and so on. Okay, so this is how you prepare a short range cash flow budget. Okay, thank you.